Hello and welcome to the Trading Zone. Welcome to another week of trading, a lighter week, but we got some busy earnings ahead. Brian, how was your weekend?
Great. Just finishing up fall sports for the kiddos and watching a lot of football and getting ready to trade these markets. The earnings should be exciting with a whole bunch of tech earnings lined up over the next couple of weeks here, and then we have the election is coming upon us faster than you'd expect, Joe. It's already October 21st here, and we're just 3 weeks away now.
2 weeks and a day from the election. So yeah, that's it's going to be here soon. October has come and gone really quickly. Still a lot of the same themes are there. But it's been an exciting October. So maybe we're just kind of waiting and seeing. I'm super excited to get to our show today. I want to thank everybody for joining in again, as usual. It is a great thrill to bring this to you every week. If you're here now live, say hi. If you're catching us on the replay, leave a comment or come to our website, ask for our book, say hi that way. It's a great book written by Brian, some stories from myself in there, but it's about the options mindset, the mindset of a successful trader. So I think y'all should check it out.
Yeah, and Joe, just one question before we get our show started. Do you think the market is going to react to earnings or just sit around and wait for the election to happen before it decides to make a move one way or the other?
We've seen already it's reacting to the single stock names. So the market's kind of sitting still as a whole, maybe grinding higher with a little bit of momentum. But we're getting some big moves on the single stock names.
Yeah, I agree with you, actually. That's kind of an interesting take. Normally you see one big stock move, the rest of the market moves with it or not. And maybe there will just be some choppiness on a macro level, broad-based indices over the next couple of weeks here. But I think the earnings picture is going to be very interesting. We have a trade later on in the show that we give on one of those names you might have heard of before. Yeah, I think the earnings plays on individual names will be interesting.
I thought you were going to ask me about my Detroit Lions. If you want me to talk about them.
Nah, I'm kind of bored with them already. We'll just wait till they face my Bears in a few weeks, and we'll see what happens and see.
That'll be a lot of fun. The NFC North, best division in football. It is. That's going to be great.
That's pretty.
Well, all right. What do you want to jump into it? Want to start the show? Want to do this?
Yeah, let's do it. Let's go.
Okay. Welcome to the Trading Zone. I'm Joe Teagay for Equity Armor Investments. With me is my partner, Brian Stutland.
Hey, I'm Brian Stutland here, Equity Armor Investments, portfolio manager for mutual funds and individual clients as well, and investment advisors that we treat in our outsourced CIO. We are here on the Trading Zone today, every Monday, 1 p.m. Eastern, sponsored by the MIAX. We have a great show today. Joe, why don't you kick us off here?
Yeah, so over the weekend, Goldman Sachs putting out a note, beware, lost decade might be ahead. Now, this is a theme that people have been talking about for a long time. A lot of people know what it is, but essentially they're saying there are secular bull markets, there are secular bear markets. A lost decade essentially in the U.S. stock market has just been a secular bear market where we've really treaded water, waiting for that next bull to kick in. And it's happened several times in history. We'll take a look at it. The question is going to be, is it going to be next year or is it going to be 3 years from now? Again, interesting to see, but we should just be aware of it. Goldman's predicting it'll start starting next year. So we'll see if they turn out to be right. This week, there's really no major economic news to speak of. There still is the geopolitical concerns. Anything can happen. Cannot take that for granted. Election is 2 weeks away. Like we mentioned at the top of our show, we got some big earnings coming up. We'll be trading Tesla at the back end of the show. Make sure you stick around for that trade. We also have Boeing, Verizon, some other telecom out there. So interesting week of earnings. Tesla is going to be the big one for us.
Yeah, and I think, as we jump into looking at the volatility landscape going forward, I mean, obviously I want to talk more. We'll get to that, the big story on the Goldman Sachs call, because lost in space is a Will Robinson warning here, where stocks do nothing for But we'll talk about that, how steep those sell-offs are, how much the lost decade really means, if that actually is going to happen. So I'm looking forward to it. But when we look at the volatility landscape here, we're looking at the skew index right here. This is a relationship between the downside put and the upside call in the S&P 500. Those are option premium contracts that people are willing to pay. Obviously, they're paying more for the put versus the call. That ratio rockets up to that 12-1, 14-1, like we saw in August. Right now, it's definitely elevated, like we've talked about since mid-23. The question is, does it come all off the board, or is this all a function of the election pending in 2 weeks? And then all of a sudden, once that's done, option traders get rid of those puts, those protective puts, and then play to the upside. What do you think, Joe?
I think we're kind of on the lower end of the range. I think we came off in a very nice way. In October, we had a little bit of concerns. We had the geopolitical concerns start of the month. Volatility's eased a lot. I think a lot of that has been in oil. A lot of the concerns have come off there. But I think we're at the lower end of the range. We'll have to see. I don't know if we're going to be getting back down to these levels, at least not before the election for me. I think this just has to be the new range, the new normal that we'll be living in. This was the normal last year. I think we need to be prepared for this to be the new normal in this box here.
Yeah, I'd like to see us drop below that 4-1 ratio if I'm really going to feel like, the bulls are in control with the call buying to the upside, and the put buyers sort of dissipate. So we'll see how that plays out. The trend definitely is still, on the move higher, which is a little concerning. But we've seen before in the past where markets have gone up and volatility has gone up. That happened in the late 90s. Here on the VIX futures curve, Joe, what do you make of this with basically, we're kind of in between everything that we were between 1 month and 2 months ago versus a week ago?
Yeah, but like we talked about, we got volatility is coming off for the past week, but we're still elevated. So volatility is a little bit lower from a week ago. We're still up on a month ago. So we're still on a higher volatility expectations for the election. This is we're past the October future, which included the election in it. Right now, the front month is the November future, which will be which will be after the election is completed. That will be the VIX that comprises this last half of November and the first couple of weeks of December. So you expect lower volatility then. So the spot right now is incorporating the election. That is higher than the front month future. That's what we were expecting when November became the front month. So now here we are in the situation. The question is just going to be, are we going to see a big bout of volatility around the election, after the election, see that VIX up to 30? Then the future will have to chase it. Or is volatility going to come down after the election, after the event happens, and then we'll maybe see that normalization of the VIX curve?
Yeah, this is like in poker where you get like a pair of twos as your first hand or a pair of threes or fours, and you're like, what do I do? How do I bet? Which way volatility is going to move? I think it's kind of a bit of a coin flip, but if you look on the downside to the VIX 16 level, if it really goes extreme, I think it's going to move out of this band after the election. Put it this way. We're either going to get this sell off and the VIX is going to pop through 20 and stay above there for a little bit. Then you'll have an upward sloping curve, or it's going to collapse and fall below that 16 area. So there's going to probably be a move here.
I'm not so sure. I think I'm kind of in the camp of 16 is like the new floor. Like we used to have like a floor of 13 to 14. That was like the lower end of the range for you can expect to see the VIX. I'm thinking 16 is going to be like the low end of the range for the time being.
Yeah, I mean, maybe you're right. Maybe even if it falls below 16, maybe it only stays there for a little and then at least mean reverts back up to there. Probably indicates a good opportunity to buy some option contracts in your portfolio. So maybe that's what we'll be looking to do, Joe.
Yeah, and I am expecting December, the very beginning of January, maybe like the first week. That'll be a low spot for the VIX seasonally. Should expect it to see it kick back up after that. February often can be a very volatile month, as we all know. Let's take a look at the S&P 500, Brian, and their trends. Something we've been watching very closely following this upper channel. We're trying to crack back in it, but the shorter medium channel, we're still looking very strong there and still has that potential to get to that higher spot of the range we had brought up last week.
Yeah, it does look like the trend is still intact to the upside. Watching that lower end, we'll keep you updated on that. Any sectors in particular that catch your eye that might, indicate which way this trend goes for the S&P?
Yeah, so this is going to lead us into our big story, Brian. So we talked about Goldman and the lost decade, and this was, obviously we talk about AI a lot. This is a chart that we look at a lot, a sector we look at a lot. The semiconductor sector, of course, incorporates, the NVIDIA, the AI king. And last week had a big hiccup. We had a big surprise announcement from ASML. The market didn't like that surprise. The semiconductors got hit really hard on the heels of that, yet it recovered nicely from the Taiwan semiconductor earnings. So I had a little bit of pullback, came back. This is a very important level for me, very important chart for me. I'd love to see it continue to rise, but there is some maybe some warning signs. Maybe it's good to see some more breadth as we're going to look at the lost decade.
Well, I think this is an indication of a reset. I mean, as we recall, we gave a trade on ASML. It didn't work out that well. It was a call butterfly to the upside. But when you think about it, that call butterfly was only 1% of the value of the stock. So if you spent 1%, the semiconductor index as a whole, if you use that butterfly as your semiconductor exposure, the SMH was down far more than the 1% of the value of the butterfly. So from a risk reward perspective, you had about 50% of the downside, with the potential of almost 100% to the upside on these moves. So this is why we do option trades, to limit risk. Sometimes they don't work out from a directional standpoint, but it worked out from a volatility standpoint. I look at this chart in the SMH, holding sort of this 250 level, I think, is a critical level. If it continues to hold, then maybe the bottoming process starts and can continue to move to the upside. If it doesn't, that trend line on the bottom there is something to watch out for.
Yeah. So speaking of someone to watch out for, Goldman put out a research paper this weekend talking about the end of the bull run, the start of the lost decade. And this essentially is what they would be talking about. We have, secular bull runs. These are these red arrows here. And then you have these lost decades in between them. You have a period of time where the market has some big volatile moves up and down, but essentially is flat for a period of time until it can find a new strength and a new reason to start a new bull run. And the question is, like, what point does this current secular bull run end? And do we begin this quote unquote lost decade? Of course, we've been in a secular bull run really since 2009, Brian. Some might say 2013, but really it's been a tremendous run up here from this market. Is it going to end soon? Is it going to end a few years from now? I can't definitively say, but we need to be aware that this will end at some point.
Well, here's what I think is something interesting to look at on this chart, and then we have some questions here. We'll get to those in a second, but I want to point out one interesting point here. If you look in the middle of those bull runs, there is typically a massive carpet shakeout that occurs. High volatility, it freaks people out. It gets people believing that the recent bull run is over, as there's sort of been a breakout from this like lost decade, of which there's been 3 over the last 100 years. And if you look at that, it was really like the midpoint of the bull run. I don't think we're quite at that. I think that fulfilling that midpoint run, right? So 2013, let's call it 2020 COVID, 7 years was sort of this carpet massive shakeout, and then we recovered higher. So if you take it another 7 years from there, that's 2027. So I think there's a little bit of legs still left in this bull run to the upside. I don't think we're quite there. And so if you look at that in that sense, I think it's maybe a little too early for Goldman to call this to be a lost decade coming up.
One other way to look at it would be is what is the return during these bull runs, and how close are we to the average? Well, here it is. So we have an average of a 4.6% return, and then we have a flat for a period. We have an average of a 7.6% return.
When you're saying percent return, this is actually 7x return.
Yeah, sorry.
7%. So 7 times the return that happened in 49.68, 4.6 times your return. So it's not a percentage, but actually how much you double, triple, quadruple, whatever your money.
Right. So, and of course, 78 to 2000, sorry, that would be a 17x return. So you put in $1, you end up with 17. $1,000 is $17,000. After this 22-year run. So that was a unusual, or maybe that'll be the new norm. Because right now we're close to where we were here in this bull market. We're ahead of where we were in the roaring 20s bull run on our return in this bull market. So,
well, the one thing about that, Joe, is that the first three all had higher returns in the subsequent massive bull market runs. So what if we actually got to like a 24, 25x return
right,
from
you're
that?
gonna go exponential. You're gonna want to do that up there.
Yeah. It could happen. I mean, and that's why, it's sometimes it's like, who knows? And that's why I want to own some options. I want to own protection, and I want to stay long the market. So the equities are going to generate the returns over a long period of time. And if I have some protection for those big, massive carpet shakeouts, or the one time that happens that sort of shifts the lost decade into place, I own volatility to protect myself against that, but I also get to participate in that exponential upward slope.
Yeah, and that's just a fantastic point. So finally, my last takeaway on here is just like I see like there being a risk of these bubbles when you see this concentration in a particular sector. We're now in an unusual spot, Brian. We have the semiconductors now are the largest weighting, the heaviest weighting in the S&P 500. This is the first time that's ever happened. So that is pretty unusual. Now, we've been tech heavy for some time, and we can remember the 2000s. This right here was a very unusual situation where we had the hardware equipment for technology was sky high. Now, you could argue the semis are just like a component of the hardware. And we're already up here just for like a piece of that hardware. So that is this is pretty high, lofty weighting for just one component of that hardware.
Yeah, and again, if you guys have any questions, I think we brought up some interesting topics here on direction of the market, Goldman Sachs call. Feel free to go ahead and ask. Obviously, semiconductors, I'm watching that as well to see if that breaks out a lot higher in terms of weighting in the S&P 500. But I think we do have a couple questions actually, Joe. So before we get to that, before we get to our Tesla trade, because I'm really excited about that trade actually with earnings this week, their announcement on robotaxi AI kind of stuff, just 2 weeks ago, 10 days ago. And so let's take this one question here if we have any. Otherwise, let's get to the trade of the week.
Great. Okay. Given elections coming up and then the market being beating expectations, any thoughts on the Fed potential rate cut next month?
Well, my one thought is 25 basis points obviously looks, almost 100% in the cards, although nothing's guaranteed. The question is 50% or 50 basis points. And, we've seen some Fed governors actually kind of shift and come out and say, hey, I was in favor of 25 only last time. We went 50 basis points. So I actually think maybe they come in. We've seen some inflation numbers. We're going to get an unemployment report coming out in the first week in November, which hopefully they have some of the data on that as that materializes to help make the decision. I think if the unemployment picture, the payroll picture sort of kind of stays intact and the CPI numbers have sort of been above the 2%, I think 25 basis points makes more sense right now. And then let's wait and see what happens a few more months from now, because I don't think we're in a dire economy just yet.
Yeah, that makes a lot of sense to me. It just is going to be a fascinating week, that first week in November with the elections. You're going to have the Fed meeting and you're going to have the jobs report. Bang, bang, bang. So maybe volatility will stay bid until that Friday, given all those uncertainties. But yeah, that'll be an interesting week of trading, one that we won't forget anytime soon.
Yeah, and remember, the Fed went a little bit too slow in cutting rates in late 2007 into 08. So who knows? Maybe if they're late to the party again, maybe they do need to go 50 basis points. But I think they're going to go 25 only this time, maybe 25 again at the end of the year, and then assess next year with the new president where they go from there.
And maybe that'll be a vote of confidence if they do for the market, saying the economy is on stable ground. If the Fed feels comfortable enough to only go 25, of course, that's with the caveat they're going 25 not because of any jobs issues and not or because of jobs issues and not because of inflation issues. So we'll see how the wording goes.
All right. Well, I love watching these robots walk around and everything. We got to talk Tesla. I think their announcement, 10, 11 days ago was kind of interesting. The little guys were kind of cool, cute, maybe. I don't know. Did they reach expectations? What's going to happen this week in earnings? Joe, what do you have some thoughts on them?
Yeah. Here's just some recent, Tesla, Tesla earnings events from the Bloomberg terminal. You can see their average move is 7.33%. Their implied move is only 6%. That's pretty interesting. Their forward PE up here is almost 80. It's pretty lofty. This company is not necessarily trading on how many cars they sell, but more about their vision for the future, what kind of products they're going to bring online in the future, what kind of offerings they're going to have. They had their, robo-taxi big summit last week. And as you can see here on this chart, the market, you could just say they weren't impressed. They didn't buy it. So, there's maybe a little concern there, or, maybe just some, optimism that the stock could bounce back to where they were right before that event with a good earnings number.
Yeah, it is one of the few stocks in like the Mag 7 that's actually down on the year, right? So there's definitely been some disappointment. You mentioned that forward PE of 80. That's about artificial intelligence. That's about the robotaxi. That's about the robots they're making, the humanoid robots. All that is predicated on the future growth of where that's coming. And we were a little disappointed in the fact that now we've got to wait till maybe 2026 to see all that kind of materialize and happen. And so you saw the sell-off in the market, but it hasn't really dipped below this 200 level has really been a very key level of support, I feel, for the stock. I'd probably look to put a trade around that. Something, Joe, what do you got in place for the earnings this week?
Yeah, it'll make sense to me, as we are, and a lot of viewers are as holders of Tesla. Just an idea that we have, not an actual recommendation, but just looking at Tesla currently trading at 218.5. Remember, we talked about their average earnings is 7.3%. The market makers are pricing in a 6% move. So I found that interesting. Maybe that some protection is cheaper than it could otherwise be, as this is just a put protection idea, just buying a weekly put spread, looking at the 205 185 put spread gives me some protection to the downside. If we do have a outsized downward move, I'd want to buy Tesla back if it does really move down really far, but I do want some protection in case it does move down in the medium range.
Yeah, I mean, we're still holding this, full disclosure for clients. I actually have an option trade strategy on in Tesla that's a bullish position. I want to continue to own the stock. It's a big part of the NASDAQ. It's a big part of the S&P. It's something that, represents the manufacturing industry to some degree, and the hope of a better and different world from a technology perspective. But this put spread makes sense. It's only about less than 1% of the value of the stock. If there's a 2 standard deviation move to the downside, right, a 12% move, that would represent, a $23 drop or so in the stock. That would put it below 200. That trend line would be, sort of in play. And that put spread protects from below 205 down to that lower trend line where, certainly I'd be willing to load up more on Tesla at that point.
Yeah, it's bottom line, a little bit less than 1% to put on the trade. If it does move higher, we'll be happy because it's probably moving higher than 1%. If it does move lower, we're stopped out here at 205 on this trade idea. And then happy to get back into it if it goes down into this area.
Yeah, I think one thing to remember is, think about it. Spend 1% for one earnings play. There's 4 of these events that happen every year, right? If I have to spend 4% and I'm wrong on every one of them, I got to believe the stock is going to be up way more than 4%. So I call that like sort of a cost to own this stock, so to speak, to have some level of protection to the downside. And I think it's pretty cheap right now, given, potentially making a 7% or more move after an earnings play.
Yeah, it definitely makes a lot more sense on a stock with an 80 forward PE than it does with a stock with a 12 forward PE, because you're a lot more uncertainty, a lot more is going to depend on their revenue, how fast they're growing, their projections for next year and the years down the line, and so on. So that's why it makes more sense in names like this to have that type of trade on.
All right. Well, make sure you follow me at Brian Stutland on Twitter, or Joe at Joe Tigay on Twitter as well, or X, I should say. Elon Musk would be upset that we said Twitter.
He's not. You wouldn't like that trade either. You would say we should be YOLOing upside.
I know. Hopefully, it doesn't cancel our accounts. But yeah, we'll be excited to update that trade. So follow us. We'll try and give some idea after earnings comes out on October 23rd what's going to happen from there. Joe, any last takes before we wrap things up?
No, I just hope everyone has a fantastic week of trading. It's going to be an interesting start of November. I can't wait for that. But yeah, make sure to tune in every Monday, 1 Eastern. Check out our website for our market making options trading book, Trading with Edge. It's a fantastic book, and I can't wait to see you next week.
Good afternoon. Talk to you next week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.